All right, guys, welcome. We are now going to be doing market structure and Fibonacci together in one lesson. Market structure comes before the Fibonacci because without market structure, the Fibonacci will not work, does not work. And if you don't know how to read market structure, you definitely won't know where to place the Fibonacci. All right. This is, again, a fundamental basis of the strategy, which is pure price action. All I do every day when I go into the markets is look at these candlesticks and all of this structure that you see in front of you. That's all I do. I don't use any indicators. I don't have any special algorithm that's in the background or anything. The market is technically my algorithm. I follow it. It shows me where it wants to go. I pull the trigger and I win or I lose. But most of the time, I win. And you guys seen that I win a lot. But it's always because I'm just stuck, truthfully, and obsessed with the market itself. What it does, how it's moving, how it's behaving. Is it aggressive? Is it stalling? You know, all of those things you have to become obsessed with in order to really be good at trading. A lot of people use indicators, and that's fine. But the problem with indicators is that they're lagging. Indicators only populate forward after the market moves. So what would you rather follow? Something that's in front or something that's behind? That's the actual question. What would you rather follow? The leader or the follower?
Front. I don't know, bro. I'm just answering questions.
We're going to say the leader.
I
Yes.
said front.
Oh, you said the front?
Yeah. The best waves come from the cold front. That's
They
a
sure
surfing
do.
term. You'll learn
They
that
sure
later.
do. So let's go over market structure and what it is. All right. Market structure identifies the trend. Higher highs, higher lows for an uptrend, lower highs, lower lows for a downtrend. It helps you determine the bias, right? Break of structure signals potential continuation in your favor. A change of character signals a possible reversal in the trend. There's a difference between a break of structure and a change of character. A change of character means there's a trend change. A break of structure is what you use when you need to see confirmation in your favor. Does that make sense, guys?
Yeah.
Good. When I put it in the chart, it'll make a lot more sense. There's key areas, swing highs, swing lows, and liquidity zones. We use all of it. I'm talking about we use it all and we put it all together. And I'll show you guys how to put it all together too. The structure gives you the context for where price is likely to react. That's why we focus, or I focus so heavily on market structure in general. Every time I'm looking for something is because I'm looking for where price is likely to react. Straight up. For instance, what we did this morning or this afternoon on ES. Price broke structure to the upside. All I did before any of this ever printed out was look for an area where price would be likely to react. I found the area, and you guys saw it live today too. I found the area. I said, okay, this is where it's going to be, 74.38 for the entry. We place our stop loss here. Let it rock. Price came exactly to the T, the level that we called, and it never came back. That's beautiful. Now, it doesn't always happen like that, but it does happen a lot with us. Why do you think that is? Why do you guys think that that happens more often than not in the
Market
chat?
price action and Fibonacci.
Yes, price action and Fibonacci, straight up. That's why we're in this class, so you guys can understand how easy it is to understand market structure. Now, the tricky part is in the beginning. because you don't know where your eyes will set on the chart. Because especially if you're new on a chart, you don't really know what you're looking at until you have somebody help point it out to you. Because if you do get lost in the sauce, you're going to get lost in all of this. And all of this is going to make you confused and not know what direction you're going or what it is that you have to do. And you'll make a lot of mistakes if you don't understand market structure.
Wow.
So we'll go over it. And I've been there before. When I first started, I didn't know the difference between up and down in the market, believe it or not. As good as I am right now, when I first started, I couldn't tell if I needed to buy or sell. My eyes just it wouldn't take to it. I couldn't understand the pattern. But the more I looked at it, the more I studied market structure, the more I studied price action. The price action is all of this inside of the market structure, right? The more my mind started recognizing pattern. And pattern recognition is the secret skill set that you want to acquire as a trader. Pattern recognition is the most powerful skill set you can have as a trader. I don't care what anybody says. Not even confidence. Ego will get you clapped. Confidence will get you clapped. Information will get you clapped. But pattern recognition, that will get you paid. Getting good at pattern recognition will get you paid. And that's what this class is all about. So let's start with this. Whenever you're looking for where the market is going and where you need to, what's the word I'm looking for? Where you need to set your eyes on is if you just opened your chart today and all of this is what you saw right here in front of you. Exactly, throwing dollars, baby. And all of this is what you saw. When you're looking for a setup that's right in front of you in present time, in real time, and you don't know what to do, all you have to do is go back. Go back in time. Go back in the history of the market to see what's actually really going on. And go choose a starting point. You could choose a starting point from a week ago and start from there and follow the market as you go and start labeling the higher highs and higher lows, higher highs and higher lows, so that you can mark out a trend and start following it. And believe it or not, subconsciously, your mind will start to process what's happening. And by the time you get to the front of the market, you'll be able to calculate and make a decisive
feel for that shit.
Huh? Yeah, you'll get a really
feel for that shit.
You'll get a really good feel for the market. You'll get into the flow of the market. If you notice, the market moves in waves. So you'll start flowing with the waves. What do you guys think causes these waves? What do you think? What do you think is swimming in these waves? Any answer?
Trend motion, like people's emotions.
Yeah, but it's definitely that. But it's the whales that are swimming in here. Whales.
Yeah.
Meaning the big funds, the hedge funds, the central banks, and all that.
Institutional boys.
The institutional boys. That's who's swimming in here. What I'm about to teach you is how to swim with the whales, not against them. All we do every day, when I send you guys those signals, all we're doing is catching a slipstream into the wave that they're called, the flow that they're in. We're in there. What's that in water terms? What is that called? In their stream or something like that? We're behind the whales. As they cut the water, we're following them.
Yeah, we're the dolphins, boy.
We're the dolphins.
We're the dolphins trying to be sharks.
We are the dolphins behind the whales. That's what.
Not the actual dolphins, but you know what I mean.
No.
We're not talking
They're awake.
football.
Yes, Semi. Thank you, Semi.
We're not talking.
We're swimming in the whale's wake. That's all we're doing. And in order to find the wake, you have to find this trend. And in order to find the trend, you have to know market structure. So let's start over here. That all makes sense to you, right? You guys, right? I painted that picture good for you? I think I did.
Yo.
So listen. Let's start with this right here because I didn't put this low here.
Yo, I bet you this gold play is gonna hit while we're talking.
So we got a low here.
Best believe I'm looking at this shit on the 5 minute and the 15. Ooh, on the 15.
All right.
Come on.
Actually, let's start it like this because it'll make a lot more sense like this. We got our low. We got our high. Higher low. Higher high. All right. This is where we start from. This is what's called a swing low right here. Boom. You always want to mark off what you're finding. Sorry, that says swing high. It's a swing low. This low point right here is what's called a swing low because literally it just swung in, created the low, and just swung out. Swing low, right? That is your low. After your low, you follow it up, and this is for bull trend. A bull trend is created of higher highs and higher lows. That's how you recognize if you're in the bull trend, when the market has created and is still creating higher highs and higher lows. That part is very simple. You got your low, you've got your high. This is a higher low. Why do you guys think this is called a higher low? This is not a trick question.
Highest low.
Because it's the highest low. It's not a trick question at all.
It's stupidly
I won't even
simple,
ask you guys.
but it's confusing when you learn it at first.
Yeah, like if you, because most people
Chinese, brother.
Yeah, because most people think that it should be something more intricate and sophisticated. It is not.
Well, you teach a very simple level of
of
what do you want to
course.
call it? Strategy. Honestly, after you taught me the whole strategy, I was like, "Are you fucking kidding me?" That's it.
Like, right? You're like,
I was like, "That's
you're
it."
telling me that that's all you do. I'm like,
I thought
yes.
I had to do math and intricate geometry.
It's just that pattern recognition, geometry. That's
when you
it.
say Fibonacci, I'm like, "Oh, what the hell?"
Like, what the hell is that?
Fibonacci is my best friend.
I don't have a master's degree, man. No. So you've got your low, you've got your high, you've got your higher low, and now we've got a higher high. Why is it called a higher high? Anyone?
Go ahead, Wasemi.
Wasemi, why is it called a higher high?
Because it broke the structure of
It's
the.
higher than the previous high.
Oh, there you go.
Because
Shut
it's
the hell up,
higher
dude.
than the previous high. There we go. Carlos, you're gonna be next. I'm gonna get you with a good one.
Oh, you're gonna give him a trick question?
No, I don't handle trick questions. I don't hand out trick questions in trading because it's complicated enough, and I want you.
Facts.
I wanted to get you. I want you to get it immediately because it's higher than the last high.
Yep.
A higher low is a higher low because it's higher than the last low. When you see it just a high, it's all that is. It's just a high. There's nothing else. There's nothing else around. So we've got a high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. This is actually a higher high.
Oh, hell yeah, gold. Keep going, gold.
Oh, we're gonna get there right now.
Gold wants to get down. Just gotta break through.
This is a higher high.
Oh, come on,
Why
baby.
is this a low, guys?
Huh? Lower than the other low.
No. Actually,
Huh?
where did it end up? Hold on. Let
Well,
me.
isn't it lower than the
'Cause
last
I did
higher
this
low?
when it was zoomed out. No, this is actually a higher low.
Yeah, but it's lower than the last. Yeah, okay. Fair enough. Yeah, because it's a low because it's lower than the last.
Well, no, it's a low because it's lower
It's
than the
lower than
high,
the past last higher lie, no?
but it's
Higher low, right?
but it's a higher low because it's higher than the last low. That's what you were trying to say.
Oh, I was looking over in the middle where the one in between the higher low and the higher high. I was looking
Oh
for that
yeah,
one.
no. Just follow the line. That's why I put the line there so we can
Oh, bet.
disregard this. Because if we get
Okay.
into this, it gets too
That's a
long, and then
chop.
we're like, we get our brains jumbled.
Oh,
So we've got
here we go.
a higher low. This is actually, why is this just a high?
Is that an equal high?
It's an equal high.
Heyo.
That's exactly what it is. It's an equal high to the last high.
Oh.
If it doesn't go up higher than that, the last high, it's just an equal high. It should
So what-
say EH, but I'm just keeping it
But
as
what does that mean? Like the market trying to figure itself out?
Look at the lows after. It starts creating a newer low.
well. The thing is, why this is just a high is because it never went higher than the last high. It's
So
basically
does
the
that
same
mean
area.
the market is trying to figure itself out right there?
Well, that just means that this is a strong resistance zone. It didn't.
Okay.
It didn't
Yo,
close and it
Los.
didn't continue. That's what that means.
Got you.
You get that,
Gotcha.
Sammy? I want to make sure she gets it too.
Yeah, we be talking too much.
Yes, I understand. Thanks.
Okay, perfect. All right.
We be-
So from that high, we get a higher low. This is actually supposed to be high,
Keep pushing.
right? Now we have a low. Why does it turn from high to low here, guys? Can anybody make out why?
Hell yeah.
Why isn't this a higher high and higher low?
It broke structure on the lower low.
It
And
broke
now it's
it broke
creating
structure over here.
Yeah.
It broke structure over here, so it created a new low.
BOS.
What else does this indicate? Yes, it's a break of structure, but it's also called
Changes.
change of character.
Mm-hmm.
Change of character. Okay.
This is how you get a change of character, like this. You don't get a change of character within the trend over here, like within the leg. You don't get a change of character. You get a change of character when it breaks the entire structure. Does that make sense? What makes it
Yes.
difficult and what makes it tricky to point out is because we get lost inside of all of this.
Chop.
And we start thinking that this is what's actually changing the trend. And this is what's changing the trend. It's not. What changes the trend is an actual break of the trend of the last higher low.
Is that why we stay in the higher time frames?
You'll see it way better on the higher time frames. You don't want to do this on a lower time frame. You're gonna melt your brain.
Oh, I know. Scalping melts my brain in 10 minutes.
So now that we've got a low now, and we've established a lower high, it's official that the trend has changed character. And now we're in a downtrend. What does higher highs and higher lows indicate? What kind of trend?
Bull.
Bull trend. And so lower highs and lower lows indicate a what?
Downtrend, bear market.
A bear trend, a bear market. So now we've established our first lower high. We've got a lower low, lower high,
Pull the shorts.
lower low. Correct. Look for shorts. Lower high, lower low, lower high. Now we've got a low. right?
Yeah.
Notice it didn't break. It didn't close below and continue the trend here, guys. This is a clear indication of a possible reversal. But you won't know that until what happens?
Break structure.
Breaker structure. BOS.
And the break of structure, yeah, the BOS, the break of structure is right here. This is the break of structure. Until it breaks this, it's still a downtrend, no matter what happens. I don't even care if price looks like this. Until it breaks this and closes candles up above, the trend is still down. Believe it or not. Because the market could easily come to this area right here. And what do you think it would create here if the market decides to go down? What would this be called?
Resistance.
Yes, but in market structure, what is it?
Equal high.
Equal
That'll be an
high.
equal high, and also it'll be a rejection.
Correct. It's an equal high. That's what that would have been
If it would have went down or created a lower low at that point.
Son of a gun. That's what that would have been. All right. So now we're here.
I think Sato asked.
Say what?
Sato had asked, like, what does it mean when it's like an equal high? Remember in the beginning of the training, he says, what does it mean? It kind of usually gives you a hint that the market wants to like change structure, or like you said, it's a lot of resistance there.
It might be a breaking point, right?
Yeah.
Well, if it
Tipping point.
if it just creates a high and it continues down, that just means it's resistance. It doesn't mean that the market's changing. It just means that it came up and created the high and found resistance again.
So just basically be wary of that point. Like be careful at that point.
Yeah, definitely be wary at these points.
Oop, I just took a short on gold.
Gold is getting close to our signal.
Here we go.
All right, so now the market decided to go up. It broke structure, created, this would be the high, right? This would be the higher high. Actually, this would just be the high. Then this would be the higher low. Then this would be a high. And then we'd start down here.
Oh, yeah. Come on.
Like this.
Would that be an equal high? It looks just like it. If you
So
put
this would be.
Those look equal.
This would be just like this.
Notice where the equal high is, Jose?
Yeah, this would be just a high. It didn't create a new high.
Yeah, so it's equal high, right?
Yeah, that's an equal high.
And then notice how the structure changed and it starts going down again.
Correct. Boom. That's why you always have to be careful in these areas when it's coming back to the last high, because you never know what's going to happen there. This could have easily just broken and continued, but instead it found resistance again, and now it came down. But this is not a change of character yet. You get what I'm saying?
Yeah.
Yeah.
It's not a change of character yet. Now,
oh yeah. Did you just freeze? You just stopped talking.
No, sorry, I was focusing on
you
right.
literally look like you freeze frame for a second.
I was like,
you just went bug-eyed on us.
You should see me when I'm trading.
Yeah, you should see me when I'm trading. My mouth's wide open. I'm like, ah!
What do you guys think this is called?
4, 5.
If this was a high and this is an equal low, what is this called, guys? What do you think this is called, Semi?
A failure of making a new high.
Is your name Semi?
Semi.
My bad. My name is Sammy.
Your name is Pedro for the rest of the night.
So which part?
Okay, so if this created a high, right, an equal high, and then it created a low, and then it created this leg up here, what would this leg be called?
A higher low?
A what?
A higher low. No,
Is it higher than this?
No, it's
You're in the zone. You're almost there. If it's not a
Reverse what you
higher low,
said.
lower high, lower
There
high.
you go.
lower high. There you go. That's what it is. You
Oh, I
got
see.
it. I'm gonna make you answer it because you're gonna you
You're
know
gonna
it.
learn tonight.
Yeah,
Yes.
exactly. It's because I want it to stick for you because I know you really want
Yes.
this class.
Definitely.
So you got a high, you got a low, you got a higher low, right?
Mm-hmm.
Now this is a low because it broke below all structure. Now you got another change of character to the downside, right?
Mm-hmm.
And so just like this, in this case, I'm sorry, I put a HL, it's supposed to be LH. Sorry, guys. So just like in this case right here, because it came down like this and it didn't create a new high, so it's a lower high. Price came down, created a new low, and then created an exact same type of lower high, just like this case. I point that out and I stress it because the market always repeats itself, no matter what. Everything it's doing, even though it looks different on the chart, it's all the same shit. Pattern recognition is also recognizing that the market repeats itself time and time again. That's why, like, when we miss entries, I'm not really worried. Sure, it sucks to miss an entry because we want that money. But I know for a fact that there's always another setup because the market will always repeat itself in some shape or form in the near future. So we got a new lower high. Now we got a lower low. Now we got a lower high. Now we have a, what is this? What is this called, guys? This is easily confusing to anybody.
What's your question? Is that one for Sammy or for me?
That's for anyone to answer.
Is that an equal?
I'm
It's-
distracted. My funded account just did something weird.
It's actually right in front of you. What is
Equal?
that? What is that right there?
The fuck did my?
Can y'all see it?
I'm not paying attention. Sorry.
Yes, I see it, but I'm not sure.
If
No, my
this is a
funded
lower
account is
high,
funky.
if this is
Higher
a
low.
lower high, right? But it
Mhm.
didn't create a new lower low, which would have to come down here.
So it's a higher low.
What is this?
Higher
No,
low.
it's a low.
Oh, the low.
It's just right here. Because the thing is, it didn't come down all the way. It didn't come down all the way. Like, we needed this to come down here to create a new lower low. You get what I'm saying? So it's just a low right now at the moment. Unless the market comes down here, right? Unless the market comes down here. Oh, sorry about that, guys. That's
The order block that is causing it to do that.
no, it's just one of my alerts is doing that.
No, I'm saying the order block on the left.
Oh, this over here? Yeah, of course. We can get into that too. But sometimes the market just finds a low. If you notice, this low is equal to this low over here. You get what I'm saying? It just bounced off of it and bounced off of it and then bounced off of it again. So now it's just a low, right? The thing is, this is where the action is at right now. Like, we're in the middle of it, right?
Right.
What we have to do is figure out what's going on in the market right now. And right now, this market is on a downtrend on the 1 hour, right? You see this? It's just on a downtrend on the 1 hour, but it did not create a new lower low. All right. This is technically speaking a higher low.
Oh.
This is
Sorry,
where
I
it
don't
gets.
mean to interrupt, but I just passed one of my funded accounts by shorting the gold.
What?
Hey-oh!
Post that
You know why?
certificate. Post
Hey,
that
brother, you know why
certificate.
I shorted it? Because I'm trying to. We're about to. We're getting real close to tapping our gold buy limit. But I decided to short it on the way
That's
there,
what's up.
and I just passed my account.
I love it. That's what I'm talking about, baby.
1 out of 2 accounts, brother. Punch the
Woo!
screen.
Oh, you got 2 accounts?
Yeah, I got 2. I got a 25K account and a 50K account. I'll get through the 50K in probably like 2 weeks.
That's what's up. Now you're on.
The
Now you're on to
25K
the money.
account took me fucking a month and a half, 2 months. That shit
That's
was
fine.
painful.
You passed it. That's called.
Yeah, well, I just passed it.
That's
Now
that's
I'm
great.
back, baby. Let's go.
That's what I'm
That's
talking about.
awesome.
That is what's up.
It's really cool because, like he was saying, once you follow the trend, it's weird how you have a weird feeling. It's like speed reading. Yo,
It is.
we're getting close on this fucking gold buy.
On
We're
the
getting
what?
close. Don't worry about it. Keep going with the lesson. I'll let you know once we get there.
Okay, for sure.
Keep going with the lesson.
So back to this. But good shit, man. I'm proud of you. I know you was
Thank
working
you.
hard on that. So this is the tricky part, guys. Like I was saying, it didn't create a new low. As a matter of fact, it created a low, which is technically a higher low. You know, this is like one of those little hybrid sections where a lot of people get tripped up. What do you guys think I would do in order to find more of an answer that's a stronger reading if the 1 hour is confusing me?
Go down time frame.
No.
Up.
Go
Up.
up
Oh,
time frame. If
Oh,
you
1
go,
hour.
if you go down time frames, you're gonna get more confused. The
Hmm.
higher time frame will give you stronger readings and simpler market structure to follow to see what's actually going on in the overall market.
Hmm.
That's what you do when you can't find anything on the lower time frame, right? So I would just go here, start. I'll go up to the 4 hour to see what's what,
Oh, keep pushing.
Wow.
Keep pulling in
to
you.
see what the hell is going on. What are we doing? You get what I'm saying?
Oh shit.
I want to
Mhm.
see if I can I clear? Yes, perfect. Okay, sweet. Now I want to see what's happening with gold. Like, where are we overall? I need answers. You get what I'm saying? I need answers.
Mm.
This is where the good stuff comes in. What do you guys think I should use in order to find out?
Put a fib on it.
Put a fib on, drop a fib on that day. So, because the market is going up, right? And it's breaking structure, changing character to the upside, right?
Mhm.
Then it's actually, yes, this is a big wave, but it's really like a retracement. You get what I'm saying? Like, this is structure right here. I don't know if you guys can see it.
If you didn't place a gold trade, I would put the buy limit on gold very soon. Getting real close. $4 away.
Oh shit, hold on. Thank you for reminding me, good sir.
Get in on it if you haven't. Gonna hit tonight. Tonight.
It's gonna hit tonight.
As
So-
Jose would always say. Continue, sorry.
All right, I said it. I used the cool position tool limit creator thing you showed me, Sato.
Oh yeah?
Just use the long
Nice.
position tool and just like
You're welcome, brother.
Yeah.
Grasshopper's slowly turning into the fucking whatever you call it.
assassins. So semi, because I know
Yeah.
you've been wanting to use the fib and learning how to use it. This is where I would pull out the Fibonacci on a higher time frame. You could even go as far as going to the daily, right?
Mm.
And making it
Yeah.
even simpler for yourself. You could go over here. So we're going to look at this. As you can see, gold reached support here, right?
Mm-hmm.
It found support. It left this huge wick. It bounced again right here. A little double bottom action right there. Found support, and it started breaking structure to the upside until it found its peak. And then it started to retrace, right? For me to find out if this is in a good area of a full retracement in the market, I would just pull out my fib, right? And I would look for point A. When you're in a bull trend, or you're looking for, or if you're looking for longs, your point A starts at the bottom, the swing low of any formation. So that's point A.
Okay.
Sorry for that cloud of dust right there.
And point B is at the.
I need to find the B. Hold on a second. I need to find the wick. Okay. Found the wick. Right? Was it here? Actually, hold on 1 second. Was it there or here? Yeah, it was right there. So that's point A, and this is point B. Point B is the highest point of the formation that you're looking at. So this is point A, this is point B, and I'll make it easier once we get there. We want to see, and we want to take a look at where we're at in the market. Did it get to a full formation? Did it stop on key levels? Did it find support on order blocks that are to the left? Which, by the way, this is the daily order block. Hint, hint. Right? It found support at the weekly key level and the order block, and it almost got to the 618 on the fib. It didn't touch it, but it almost got there, and that's perfectly fine. And what I like to do is I'll leave the daily fib on there as I'm doing analysis, and to show myself that I've placed a daily fib and I know where the overall market is moving or where the overall market has been, right? Then I'll go down to the 4 hour and I'll start looking at this. Is my fib good? You want to double check the fib. Like you see this long wick. This could have been easily a news situation or anything like that. Sometimes what you can do is you can move the fib around and dance with it. This wick makes a lot more sense to me. Why do you guys think that this wick makes a lot more? This point A here over this point A here makes more sense for it to be up here when I moved it.
Because it already retraced to the 618. I believe that was your question, right?
There is that. But also, what is the fib lining up with?
618.
The fib
I can't see.
Okay, so the fib itself, the 618, is lining up with the weekly key level
and the order block
and the daily order block. Very strong confluence. This gives me confidence that the market may stay right there and continue upward from here. So all of this here is accumulation.
Yep.
All of this here is accumulation.
They're trying to psych you out right there, make you sell.
A lot of people will do anything, and they could get wrong. They could get clapped. You know, they could take some L's, or some people could read it right, like we were just reading it, and take it for what it is. And hopefully that's the right call. Because no matter what it is that you do, there's nothing that's 100% guaranteed in trading. As long as you approach trading with a probabilistic mindset, meaning it can be 50-50. Anything can happen no matter what you analyze. You have to accept that because that's trading. Trading becomes gambling when you don't accept the probabilities and you don't know how to analyze the chart properly. And you're just going for it because you feel good about it. That's gambling. I don't trade because I feel good about it. I trade because the market said this looks proper. It falls within the rules of the strategy. This looks like the area where you should pull the trigger. So that's why I pull the trigger. If I didn't know any of this, then it'd be gambling. But because I've lined up, I've marked out the structure properly. I've lined up the fib properly. I've identified a daily order block, which is very strong. And I already have a weekly key level set. And the market has reacted 3 times from those levels. There's a high probability that I'm right in going long. You understand what I'm saying? It's just that simple. There is math behind it, but it's not rocket science. It's more so common sense when you really start to think about it. Like, how come every time, like if you look up here, it essentially did the same thing I'm talking about down here, but up here. It came here, it said, tapped it, rejection. Tapped it, rejection. Tried it one more time, and it finally failed. So now let's go down here. Tapped it, rejection. Tapped it, rejection. Tapped it, rejection. And now it could possibly fly. You understand how that works? It's just a pattern in what's going on here. That's all this is. So there's a high probability that going long here is going to work out. That's why we have this play right now set in the chat, because this may work out. Why? Because we've got a break of structure here, a break of structure here, right? Close very strong to the upside, and it's already pulled back into the 618 area. Hopefully we get tapped in. Hopefully it doesn't leave us again. But it's already showing signs of it wants to go long again. All you have to do is wait and have conviction and hold the play. That's the other difficult part about trading, is having the patience and the courage to wait. A lot of the times we get too antsy and we don't wait. We say, fuck it. We just jump in.
Limit up a tad.
Everybody does it. If somebody tells you they don't do that,
dude, I'm not gonna miss this shit. It's so close to tapping, dude. We're literally less than $10 from tapping.
I know. I want to hit the button too, but fuck it.
I'm not in. I just moved my limit up a tad. That's all.
So I'm gonna clear this up. But before I move on, does anybody have questions about lower highs, lower lows, higher highs, higher lows? Anybody? Any question? No question is a dumb question.
Dumb questions are the best questions.
They are. The question you think is the dumbest is actually the one that'll give you the best answer.
How do you think I learned so quick? That's the stupidest fucking questions.
You think they're dumb, but I'm like, that's actually a really good question. But like, so this is the answer, Sato.
Much appreciated.
But if you guys don't have any questions, then I'll move on to how we start placing the fibs again. And we're going to go into the fib action, the fib section of this. What do you guys think a Fibonacci retracement tool is used for?
Order filled.
Oh.
Don't worry about that. That was me, Market. No. We didn't hit yet. We're going up. I
thought that was me.
Patient.
I thought that was me.
No.
I was like, oh, we're in? No. Oh. Yeah, that's all right. Keep doing your thing. Hey, trade what you see. Trade what you see is my motto, especially to all of my students. Trade what you see.
Eventually, it's like the Matrix when Neo discovers he can fucking stop bullets.
Hey, you'll see.
Yeah, I'm not there yet, but I'm still gambling.
So back to the question. What do you think the Fibonacci retracement tool is used for? The answer is in the question.
It's a tool that a lot of traders use as a form of confirmation.
No, that's not what it's for. It's a form of confluence, yeah, but that's not what the tool is for.
Fair enough.
What is the Fibonacci retracement tool used for?
To line up with your key levels?
The answer is in the question.
It measures.
What is the Fibonacci retracement
What is
tool used for?
Oh, to figure out where the
it
retracement is
measures.
so that we know where to buy or
Yes.
sell.
What'd you say, Simi?
I said it measures retracements.
It measures
Helps you
retracement. That's all it does. It uses the Fibonacci sequence, which is a mathematical concept and theory of some genius made it up, and they've applied it to being able to measure retracements on a chart. It's a mathematical equation in this. This whole thing right here is a mathematical equation. I'll make it bigger.
to.
And I'll turn this into lines.
Dude, I have such a good timing of buying at the wrong time.
Trust me.
Dude, literally as soon as I bought, that shit went straight back down to the towards the. Honestly, it'll hit the fib. I'll be happy about that. I'll be in 2 positions.
You'll be fine.
I'll be
So
fine.
this right
like
here,
I said, we're gonna hit this shit tonight.
tonight. See this, guys? This
Mm-hmm.
is the Fibonacci retracement tool. Can you guys see the lines and the numbers perfectly? Or is it foggy?
Yes.
Yeah? Okay, good. All of this has been mathematically calculated. All of these levels here. You got your 38%, your 50, your 618, 786, all of this. Every time you move it, it calculates itself as far as the thickness and how, not the thickness, but the width of how far apart all of the levels are. It does that automatically for you. It's built into the tool. So the farther you go apart, the further these 2 take profit lines move. I'll make that more thick. And they're used, and this is used for measuring. You're measuring the distance of how far the market can retrace and how far the potential of the market has to go. Whether it can go this far to the first fib extension, which is a take profit zone 1, or to the take profit zone 2 fib extension. These 2 right here are used as take profit zones. All of these levels in here are used as retracement zones. Make sense, guys? Now,
Yes.
now the key levels to watch are the 38.2. The 38.2 is a shallow, it means that there's a, what's the best way I can put it? It's a shallow retracement. If the fib only comes to here, right? That means that there is a strong trend and there's not enough sellers to push it down into the premium area. You'll see a lot of pairs they like to use the 38.2, bounce off of that, and they'll get you to right here. Right?
Not us.
There is the 50%. This means equilibrium. Today, the Dow Jones, the US 30 signal that I sent you guys, hit the 50% mark and it continued. All right? It's a balance point. The market needed the 50% to balance out and then continue. All of this was just a correction. It literally hit here and it was supposed to come here, where we were sitting. Yeah. And it would have took us up with it.
Yeah, but that hedges our risk. That's why I like your strategy. Yeah,
for sure. This is a strategy. I'm telling you, the strategies. I'm telling you guys right now, not just because I use this strategy, but because I'm constantly winning with this strategy consistently, that this is one of the best strategies out there. It's the simplest, it's the most consistent, and it's the most powerful strategy that's out there. There are a lot of strategies that are consistent and powerful and all of that, right?
Yeah, but they love having gigantic fucking stop losses.
Well, it's not just that gigantic stop losses. It's that those strategies can be quite complicated for no apparent reason. You see how all I do is I use my fib, go to point A to point B, and I wait for point C to enter, and then I just take it up. Other strategies will create all types of different terminology for everything in between that you must know, and it must confirm before you ever enter. I take all of that shit out of the way, and I just keep it as simple as this, because this is all the market is really doing. All the market is really doing is moving up or down, or up or down, or up or down. Your job is to find the trend, determine the bias, and find a setup within that bias. If it's in a bull trend, your job as a trader is to find a setup within the bull trend. And the best entries in any trading are the retracement entries, where you're catching, where you've identified the trend, right? And you're catching a train seat on that trend. You don't want to jump up in here, which a lot of traders do. There'll be a high that comes up in here. Oh crap, the market is bullish. Let's buy. Womp. Loss. What we do is we're like, hey, the market is bullish. Let's wait for it to come back to us. Then we'll jump on the train and eat lunch together. That's all we're doing. We're not doing any of this here. We're not buying up here. We're buying at the lows and selling at the highs. The most simple and prominent statement in all of marketing, of trading and the stock market. Any market. You buy low, you sell high. You get what I'm saying? What you'll be able to do with this strategy is perfect buying low and selling high. And in a bear trend, right? If this is the 618 right here, and this was the low, right? We're gonna enter high and sell low. If it's a short trend, we're actually gonna buy at this actual lower high, because the market came down here. Came down here. Let me create this let me create the structure for you guys to see it. It'd be just like this. Boom. The market started here, broke structure to the downside. Now we know we're in a bear trend. Found support. All we have to do is know that price comes back up to the breaks of structure and enter here for the short down.
We go.
That's all we're doing. It's the same thing as the top one. The market is coming up. We don't buy high. We wait for it to retrace. We enter here and we run it up. Does that make sense?
Yep.
Does that make sense, Semi? I want to make sure, Semi.
Yeah. Sorry.
It's as simple as that within the concept. Where things get complicated are when you're by yourself and there's no one around to consult with or talk to. Trading is a one-man game. A lot of the things that you do, you're doing it by yourself. So the best thing that you could do for yourself is arm yourself with the skill set of how to read the market properly.
Yeah.
You know, because when I started out, I knew I didn't know shit. But I still tried to like figure it out. Like, yeah, it's gonna do this. Yeah, it's gonna do that. Oh, because I placed my entry here, this is what's gonna happen. I learned out the hard way that the market is in fact not going to do what I want it to do. That is the actual truth. The market is only going to do what it wants to do, and my only job is to read this market structure properly. To read this market structure properly, so that I can get in position, right? See where I'm at, place my entry, my Fibonacci, find my entry, look for extra confluences, which are extra confirmations. Confluence is just a fancy word for confirmations. Identify my order blocks. This is the 1 hour. Decide on an entry level, whether I want the 618 or the order block, right? Decide where I want my stop loss to be, whether it could be right here. It could be just under here. What do I have it over here? 48.4. What? 45.04.
I've been putting my stop loss below the last low because I'm just scared.
That's fine. That's perfect. I like the fact that you did that. There's nothing wrong with that. That's perfect. We found our entry. We've identified our stop loss first. We don't move. We don't care about any of this until we fix the entry and the stop loss. We can use the Fibonacci extension tool to gain to complete where we want the take profit to be. But always remember, you can take profit anywhere within the move being in profit. You can decide wherever you want to take profit, but this will be the play. Now you got something here looking about a 1 to 5 R multiple on this, the risk to reward ratio. And all you do is just have the confidence to set it and let it rock. And all of that stuff that we did before is what I do every morning to find out where I'm at and what do I want to do with what the market has printed for me. Make sense?
Yes.
That's all I do. Now, you can do things like this as well. There are times where things get tricky with the fib because you can't decide what position point A should be at. Sometimes point A could be here. Other times, this may have been the correct point A. There's 2 lows here. So whenever I get into that type of conundrum,
gold just tapped.
It's about to tap.
Oh, I moved my buy limit up. I forgot to tell you.
Whenever you get into that type of conundrum, you just move over to the 4 hour and just see which one's more solid. It's less for you to choose. This was the last candle up. You pick that one, you stick there, and then you keep it like that. You can choose to do that. Or you're like, this is the last bear candle and leave it right here. This is the one I choose to go with because it was just the last bear candle. It's just a lot more. It makes more sense when I'm in the 1 hour because we're over here. It's closer to the order block area. So this is where like a lot of the orders are sitting. Now, I could still be wrong and it could still do this. Want to bounce off of this area right here. Can you see what I'm pointing at? I just want to make sure it's clear. Let me make sure these levels are thicker. The fib could want to sit there and use this as the, not the fib, the market could want to use this as the entry. But I have my entry down here. Now, if it does decide to use that as the entry, what do you guys think I should do if it decides to use this higher level as an entry? What do you guys think I should do?
Wait, repeat that.
Adjust.
What do you guys think I should do if the market decides to use this higher level as the entry? Right? If
higher level or lower level?
If I chose to use this last low here as the fib,
0.8?
as 0.8 versus this, which is the actual, that's the actual entry of the signal. But let's say I was using this as the actual entry.
Key levels.
And then the market did bounce off of this and then did retrace. And then, I'm sorry, did continue.
I mean, it's either, for me, it's a breaker structure or a key level that it lines up with. Either way, I just move the fib around.
Well, it's not about moving the fib around. It's about what happens if it decides to use this level as the entry and leaves me, and my level is still here. This is where I wanted to get in at. Yeah. What do you guys think I should, if I wanted to get in, what should I do?
Market order?
No, this is a market structure question. So yeah. I'll answer for you.
I got you. You allow it to confirm, which would mean that you allow the move to go and then retrace back to a 618, and then you jump in, but you don't jump in chasing it.
Yes, that is a proper answer. That's one of the proper answers. And in order to do that, what time frame should I be at to even see that?
As no more than 5 minutes, but it should be 15.
I wouldn't even look at the 5 minute. I would only go to the 15.
Oh,
there you go.
Whoa.
I would go to the 15. Right? And in order, like, let's say I did get left on this, right? In order for me to get into this situation here, I would need the market to come back up above and close here, somewhere, anywhere here, and retrace into this. I'd place a fib around here and I'd enter here to take it up if I wanted to get in.
So basically allow it to break structure.
Correct.
And then create. Yeah.
You allow it to break structure. Sorry. You're allowed to break structure. You want it to close above this order block right here. Since we see this order block here, we know that that's going to be resistance on the way back up. If it breaks up above there and closes above, when it retraces back, it's going to retrace back into the zone. I would literally grab my fib, place it right there. Let's say that was the high. I'd look for the 618 level and I'd place an entry here. Right there. And then I'd take it up, place the stop loss right around here. This right here is the exact same process as this entire setup, just on a smaller scale. It's the exact same thing I'm waiting for. All I did was repeat my strategy, my process in my head on the chart in a lower scale. This is the 15-minute.
So the only way you would do that is like if you feel like the play has left you, like it stopped at 50 instead of 618, and then you allow it to confirm, which is break structure, allow it to retrace on a 15-minute candle, and then ride the play.
Correct. It would have to give me structure that makes sense for it to show me that it wants to continue. Because if we had a few candles come back up and close bullish up here, that's telling me that there's a high chance it does want to continue. So I want to wait for a retracement anywhere in this area, wherever it prints. Take my fib out, look for some confirmations along with a 618, and place my entry there. And wait for the market to come right back to me in this higher level here, and enter here. Place my stop loss down here, and let's see if it rocks. That's what I would do. And doing this is the exact same thing as I'm doing here. It's the exact same thing.
Make sure you don't leave the stop loss below. You actually put it below the new candle, the low of the 15-minute. And getting in on gold?
It's breathing on it. Let's look at the actual gold right now. But before I move over there, does anyone have a question? Do you have a question, Sammy?
No.
No? Am I explaining it clear enough?
Oh, yes, I'm following.
Okay, perfect. Now this is gonna take practice. Like the best thing that what I want you to do is practice it on your trading view charts and send me screenshots on the Discord. You can send it to me privately and just ask me if I think it's correct or what you need to adjust, and I'll help you adjust your fib settings.
Okay.
You know what I mean? So you're just not doing it by yourself, and you may be going in the right direction or the wrong direction. But I'd rather have you going in the right direction fast versus having to stumble when you don't need to. I can fix your fib situation fast.
Will do. That's a good idea.
Knowing the fib is very important, but knowing market structure is way more important than the Fibonacci will ever be. The Fibonacci is completely useless if you don't comprehend market structure and what's in front of you. This is everything. Even all of this stuff right here, price action, this is everything that's going to constitute whether you succeed or fail in trading, period. I don't care what anybody tells you, period. And I think she left me. Oh! Look how close. So, what do I do, guys? This is the same example. This is the same example I was just explaining. Look how close it got. Do I enter? Do I let it ride? I know Sato's in. Sato's definitely in. But I didn't hear an order filled over there, so I don't know if he's in or not.
He's quiet as hell.
He's quiet as hell. This guy. Look, this was the signal right here. We sent it at 225. And now you see Sammy, you see where it started? Everything started like this. And this is the low that I chose for point A, and this is the high that I chose for point B.
Okay. Yes.
Found it just like that. And now we're here. Now we're here. At least we get to see some action live. But while we're waiting for this, any questions?
No, I kind of like what do you do if it kind of leaves you? I kind of like that. So you let market tell you if it breaks structure, and then you wait 15 minutes, not the 5 minutes, and you allow it to come back. So I kind of like that.
It's not like I'm allergic to 5 minutes and I hate it. The only reason why I tell everyone stay away from the 5 minutes is because you're going to be dealing with this. All right? And if you're not skilled in pattern recognition and price action, what are you going to do with this? Like, what are you reading here? Look at the difference between this price action right here and this price action right here. What would you rather stay reading and mark off? And what's easier to plan around? And not only that, because it's a higher time frame than the 5 minute, that means that this is a stronger situation for you to have confirmation that, yeah, if it breaks this 15-minute order block over here and it closes up above, I'm gonna wait for it to do what? Like we spoke about.
618.
Yeah, it's gonna do something like this. It might explode. Hopefully it doesn't. But let's say it stops right here. Then we wait for it to come back to the what? What is
618. 618.
No, the Fibonacci doesn't exist right now. If the market broke structure to the upside, what are we waiting for the market to come back to?
Retest the structure.
retest the break of structure. Boom.
Yeah. Which is the body of the candle, correct?
Which is the body of the candle. Well, which is the break of structure.
Yeah, but it's hold on. It's usually the body of that break of structure.
Oh, that's what you meant by that. Okay, yeah, I got you now. Yeah.
Sorry.
That's a break of structure. Now, don't get it twisted. Wicks can be constituted as breaks of structure too. A lot of people don't know that. A lot of people think that it's just the body. But what is a wick made of? If you go down to the 5, you got bodies up here. You got bodies within these wicks, right? So at times you can use also the wick you can constitute the wick as a break of structure. Now that's a more advanced way of using price action, but it's also objective. It's up to you, especially if you get specialized in a specific pair or asset or ticker, whatever you want to call it. You'll start to recognize what it does respect and what it doesn't respect. Because sometimes you'll get a pair that respects the wick more, and then it'll use the wick as the break of structure right here. You see what I'm saying?
Mm-hmm.
It could do that. It can do that. Because why? This wick is a respected level. A wick was left here. Why? Because that's a respected level. Now, if I look to the left of this wick, what do I see? Right here. This is a respected area right here. Boom. And what did the wick do? It tested it, then it tested it again, and it failed. You see how I'm bringing it together for you so you can see it clearly?
Yeah.
That's how meticulous you have to be. And so when you get into the lower time frames, you have to be even more meticulous. You got to be even more detail oriented. So if we go into the lower time frame, look what you're seeing. You get what I'm saying? You can adjust here if you want to go down to the body of the candle, but I wouldn't want to be looking at all of this. I want to see the higher time frame action, because this is even more truth. It's more strength. It's the true character of the price action that's in front of me. That's why I say avoid 5 minutes until you get really good at reading price action properly and really good at reading your respective ticker that you choose to trade. Every ticker behaves differently. None of them behave the same. They may look the same, but they have their own little nicknames that they do differently. You get what I'm saying?
What do you mean?
So
there's some type of noise that's making a squeak sound. It's coming between from my bed and my roof.
It's a mouse.
I thought that was safe.
It's a what?
It's a mouse. Go to sleep.
It's a mouse on my roof?
I thought it was a movie.
She's leaving us, guys. Sato got in. I know Sato got in.
Yo, he hasn't spoken.
He hasn't spoken a word. Oh my God. Hey, listen. Now, this right here, this area right here is a market execution level. You guys know that you can market execute is perfectly fine. You don't have to wait for your limit to hit. Now, I couldn't do it because I was in the lesson. That's perfectly fine. But I'm going to do what I just explained to you guys. And that's how I'm going to enter the trade. You get what I'm saying? I don't care about all of this. Sometimes what I do in order to compensate for having a later entry is I'll add another contract. I don't recommend everybody do that, but I do that because I have the account size to fuck around like that. But you can keep your normal risk when you enter these trades. Look what it's doing, guys.
That shit says stop playing.
Stop playing with your boy. This right here, this is still a winning trade because anybody could take this at market execution and still run. This right here, this is being counted depending on what entry area you got in. You're up floating at 100 ticks right now. As a matter of fact, I gotta put that in the chat. Unfortunately, I missed the entry, but I love it. You know why I love it?
Because it tells you it works.
Well, I'm in swing trades, so I'll show you guys one of the accounts I'm managing. This one's floating. I've been in this position since down here. Just letting you guys know. You feel me? Like I've been in it, and now I'm about to stack positions. I've been in this, so I'm not losing by a mile, but I'd like to get in this trade as well because why? I spent my time on the analysis. The analysis is working out. I'm having confirmations of rejections, and it's moving up. So all I have to do is grab my fib from point A. Oh, wrong one. Sorry about that. And then once I get a high, point B will be moving. So point B, remember, like I tell you guys, point B is dynamic until the market finds its exhaustion area, which would probably be here, something like that. Right? And then I'd wait for it to show me that it wants to retrace, and then I'll start getting ready to place my order. And then I'll enter at any point, wherever point B lands. I'll enter anywhere around here. And then I'll just take it up. And then I'll hold that until tomorrow when I wake up, and I'll see what it's done. You get what I'm saying?
Yes, sir.
I hope that was clear enough for you guys.
Yeah, it was.
Does anybody have any questions about that? Anybody? Anybody? That's
You need anything else?
sorry, I was just messaging this cat.
Oh, okay.
So you see how the candle hasn't closed. It did create a wick up here. It hasn't closed yet, and it hasn't created a new high yet. Like it hasn't closed higher than here. It did break. It tested it, but this entry still has a possibility to work out.
That thing still.
Huh?
That thing's still valid.
That it still got some juice in it. It still got some juice in it. And this is why I wait versus entering right now. Like I could have entered up here, be like, oh, it's breaking. I'm entered. Let's say I enter right up there.
You'll be on that drawdown right now, shitting your pants.
Well, I wouldn't be shitting my pants, but I'd be pretty pissed because I'm like, why did I do that? The candle didn't close. It's still lying to me.
As soon as you buy it, it drops. It already know it. Oh, I got his money. I'm gonna go backwards now.
Gotcha, bitch. You know what I'm saying? Like
That's exactly what it does.
It somehow knows. I don't care what nobody says. It knows something. It knows something.
They know.
But that brings me to a good point.
Look how that shit's coming back.
Hey, and my limit order is still in place.
I think mine is too. I'm trying my first Weeaboo limit order. I hope it works. I don't know if I said it.
It should work.
Yeah, I never done it before, so let's see if it works.
It should work. That's the thing about price action in the candles. The best thing that you can do for yourself is gain the patience to wait for candles to close so that you don't have to suffer all of this. Let's look at the 5-minute and see. You see this right here? Somebody would have bought right here. They would have been winning, and then it's coming back. You get what I'm saying? Now, what could also happen is this. This could also happen.
What is the 27? First TP take profit.
Well, the TP is open right now, but on the actual fib,
like take profit. Where's your first take profit?
Oh, the first take profit would be 200 ticks. That's take profit 1. So that would be, I'll show you right now where it's at.
So that's max, right?
Huh?
That's max ticks, right? 200 max. Like that's like the top, the full play.
No. The full play is way more than that. The full play. This is gold, my boy. So this would be take profit 1.
I can't see. What's the number?
I'm gonna show you right now. I'll tell you right now. It is
45 what?
4540.9. That's take profit 1. Oh, sorry. It is 4540.8. This is the first take profit. This entire play is 700, call it 725 ticks. Hold on 1 second, I'll tell you right now.
Just give me the limit price.
724 ticks for this. The limit entry?
Yeah, the entry like to exit.
This is the signal right here.
It's just I can't see it because I'm actually showering. So just give me the number so I can place the limit price.
It is 4521.
No, that's to buy. That's to buy.
Yeah, that's what you asked me for.
Sorry, the limit sell.
The limit sell.
Yeah, like when
you're saying at the top, like at the top.
The take profit. The take profit.
What's the take profit all the way at the top?
Oh, you're talking about the take profit. I'm like the limit sell. What you talking about?
Yeah.
The take profit is 4593.3. That's 724 ticks.
I'll leave that thing at 45.93. I ain't sweating that 3.
That's take profit 1. This is take profit 2.
What was that? The stop limit is 4501, right?
Mm-hmm.
Okay. Oh shit! Look at Sammy knowing what she's doing over there. Okay.
I'm definitely going to watch the playback because I had to switch to my laptop. My phone died, but you're explaining everything so clearly.
Oh, thank you. I appreciate that. I take pride in that.
He makes it look easy.
That's the whole point of being in this team. I make it way easier than most traders do. It doesn't need to be complicated because trading is complicated enough. The hardest part isn't actual technical analysis. That's not the hardest part. What do y'all think the hardest part of trading is?
The psychological.
Psychology. Yes, it is. It truly is.
It's yourself. It's the human in trading. We're the ones who complicate the shit out of this. Like, you see how easy I make it look, and you see how trades are just working out and just blah, blah, blah. Like you saw today, Semi.
Yeah, for sure.
It looked like a breeze. And yesterday we smacked. It looked like a breeze, right?
Yeah.
But that's because I find the analysis, I follow the market, I let the market be the boss, tell me what to do. I respect it, and it pays me because I respected it. It doesn't respect traders who disrespect market structure. That's why it looks so simple, because I've learned how to set my ego aside from the market. I know that I don't know shit, and I've accepted that. I've accepted that I am just a guppy in this market. We are the dolphins behind the whales. Like, we're just following this shit.
Yeah.
The whales create the waves, so why not follow the whales? Why not follow the whales? Like, they're the ones calling the shots. I don't call the shots. I just got really good at getting in. I got really good at following the crowd. Where's the crowd of whales at? Okay, that's where they're going. Oh, they're going up. Oh, wait, they changed directions. Oh, they broke structure over here. Going long. Oh, shit. We're going down now, people. Let's take it down. That's all I do. And it's because I allow that. I used to have arrogance when I traded, like a shitload of it. And every time I got cocky, I got burnt. Every time. I'm like, yeah, I got this. What? I'm putting 10 lots on that shit. Bah! Blew the account.
Oh my gosh, yes.
Blew the account. I'm talking about, you want to feel real pain? Blow your accounts. That's pain. Blow those accounts, then come talk to me and tell me if you still want to be a trader. And if you do, then you deserve to still be a trader if you still want to trade after blowing an account. There's so many people that quit because they blew account, because it's not the account that they just blew. They just blew their ego. And they can't handle it. That's why psychology is the most difficult part about trading. Because if you can't take a loss, stick to a job, because you're going to take L's in this left and right. Before you get it right, you're going to take L's in this game. I promise you, you're going to take L's. Anybody that tells you different, don't trust them. They're just trying to sell you something. You get what I'm saying? It's like, fuck that. And that's all it is. It's just, you do have to find balance. And the first thing you need to balance is your life. Once you balance your life out, your trading becomes a lot better too. My life, I came from being a musician. So my life was always being up at 3 or 4 in the morning, waking up at 12, trying to look for a trade at lunchtime, taking L's left and right, not understanding why am I taking L's. I know how to trade. Oh, I'm a loser. Let me take a break real quick. All right, I come back, start from scratch. Roller coaster. Until I discipline myself to be like, all right, I'm going to bed at 10, 11 the latest. I'm waking up at 7 every day. I'm on the charts by 8. I'm taking a position by 9. I'm out of the market by 11. And once I developed that consistency, the profit started rolling in. That's what happened. And it took years. It took years for me to do that. But I came from a completely different lifestyle. People who come in with balanced lifestyles, they get to the bag quicker. It's just that simple. You know, you definitely need your rest. I've woken up at 9:30 trying to find a play. I still haven't even brushed my teeth. And guess how those plays turn out? Terrible.
Devastation. Yep.
Devastation. I'm like, oh, it's not. I haven't had breakfast. I haven't brushed my teeth. I haven't had coffee, and I just lost a couple $100. Oh, it's the worst. It's the worst. You know? But it's worth it, though. I'm going to tell you that. It's definitely worth it. You see this play from today? I missed this limit entry today because I was up. I was in front of the computer. Everything was going good, but the dollar started pumping. And so it made me believe that gold wanted to retrace more, deeper. And it actually in turn did, but it never hit the stop loss. So anybody that woke up later than me got to benefit from this this signal. But what did I do? I found an entry, a later entry. I waited. I waited for this puppy to do this. I waited for this puppy to do this. I went just like this. It left me. right? I already knew because of this wick, we had a possibility it was gonna go up because this is a long wick. So that exhaustion right there, I was like, oh, that's a bullish indication. Not only that, a strong bullish closure right here. So I just placed my fib, waited for it to come back. I wanted to see extra rejection, and I entered somewhere around here. And I just waited and waited and waited, and then it took off. And from that, I made $900.
Yeah.
That's not bad.
Not bad at all.
That's not bad at all. I'll tell you that much. That is not bad at all. So let's see where we're at here. Oh, the puppy's coming back. The limit is coming back, people. Oh, shit. At this point, I'll go right here to the 30-minute. And then I'll go to the 1 hour. And I'll wait right here. Why would I switch over to the higher time frames at this point? Why do you guys think? It's actually a very simple. All of my questions have simple answers.
To have a better view.
To have a better view. To have a better view. It's simpler. It's cleaner. I'm not over analyzing. I'm not thinking too much. Now, there's nothing wrong with being on the 15-minute because the 15-minute could give me what I need. But also, the 15-minute is giving just consolidation vibes right now. It's just doing this right now. Even though I can read it, it didn't break. I'm sorry, it broke, but it didn't close above the structure. It left the wick. It came back down for a second tap into the area, but this candle isn't closed yet. And we still have 6 minutes on this candle. So we have to wait for that. So instead of doing all of that, I'm just going to let it coast right here. And I want to see this 1 hour candle turn bullish and stay bullish. It's actually not 6 minutes left. It's a whole hour left on this candle. This candle is fresh. It's only 9 minutes fresh. So you sit there and you just wait. 80% of trading is waiting. Shit, 80 to 90% really. A lot of it is waiting. That's like poker. If you guys play poker, a lot of poker is folding bad hands, waiting for good hands to play. And that's what we're doing right now. We're waiting for a good hand to play. This looks like it's a good hand. We've got a second rejection so far. We've got the first rejection and we've got the second rejection, and it just pumped and turned blue. Now let's see if it stays like that. That's all we're doing right now. That is all we're doing, ladies and gentlemen. Do you guys have any questions about the lessons today? Any questions? Because I'll stop recording, but we can stay on live and watch this thing play out. You guys let me know. Anybody? Anybody?
Yeah, no questions.
No questions? All right, so I'm going to stop the recording.